A fresh US jobs report is just in and the markets are moving, so it is time to prepare for the two kings, that being Bitcoin and Ethereum, and what are the major levels to be watching and what they mean for February price. With that said, welcome back to EllioTrades channel. I'm your host Krown again today, and coming at you from Dubai, actually a very sleepless Dubai as we had an overnight flight, so still recovering from that. Apologies if I mess up any one of my speeches right now, because it was, whenever I don't get enough sleep, it's just a disaster. Anyways, before we get into it, I want to ask community here, I was considering doing a video on like Loon, AVAX, you know, those three, on Monday perhaps. I'm curious if there is any interest in that. If so, definitely let me know in the comment section below. And also, if you're interested in a daily Bitcoin analysis, if you think that might be valuable to your life, I do exactly that on my own channel at Eric Krown Crypto. There is also a link in the description as well. All right, sweet. So let's start off with, let's start off right here actually on the Krown trading application. Again, you can find all this data for free at app.krowntrading.net, Krown with K that is. And there is, of course, the most important thing that we've been following for the past 2.5 months, which is the global open interest. And there's something actually very profound about this right now. While, of course, this is not a full reset that we've been looking for, which would make me feel a lot more comfortable becoming very, very bullish on this market, or I wouldn't say very, very bullish, but, you know, calling a macro low, I do see that we are not in one of the critical regions as of right now, that being above about 13.5 billion. Again, a global open interest representing the leverage positions being on the board. So with that being lower, and not in the critical regions that we've seen major dumps come from, I don't think that if Bitcoin turns down here, I don't think that if it has really the momentum, but the rocket fuel from that liquidation party to really, come down hard to, some of the crazier levels that I think a lot of people are looking at right now. I do think that the market's getting a little bit too on the bearish side after a 50% pullback, no crash in the last couple months here. And with fear and greed index also printing a 20 read, I do think that, there are a few indications that we might actually see the next move to the upside, as we've been speaking about for the past couple weeks here. There is actually still that same setup available. So let's start it off here with what I think is kind of the indicator of the day for Bitcoin actually, and that is the BBWP, representing volatility in a percentile format. I just want to let my girlfriend know that she's in the picture in the back there. She doesn't realize what's going on, but all good. Finnish people, they don't know what the internet is. Anyways, why is this important over here? Volatility is a measurement of the dispersion of returns, and essentially what this means is that when it gets really, really low, we statistically and mathematically look for expansion, which implies big bad moves. For example, the last time that we saw it this low was actually on the 19th of January, before a major move from about $43,000 to $44,000 all the way down to a low price of about $33,000. Now, it goes without saying, or perhaps it goes without saying, that volatility is direction neutral. Just because that last iteration was a downside move doesn't mean they're all going to be that way. So that's why we're going to look at tangible areas on price action and how to kind of know what the bias would be for the direction of the resolution of that major volatility event. And of course, we do have a bit of a short-term catalyst here with the U.S. jobs report. It's kind of like good news is bad news with the jobs report when they kind of overshoot what the expectation was. Apologies for that. It typically means, well, in this case, there's going to be some rate hikes, and market's probably not going to like that. Anyways, in the short-term timeframes, Bitcoin probably coming back down around here. By the way, should let you know I'm on Bybit right now, so you can follow along there if you so desire. In fact, I'm actually just got hit on a trade right here, so you know what? I will have to manage that in just a moment. All right, sweet. Anyways, let's go over into the 4-hour time frame. However, whilst the short-term timeframes do show that, maybe another retest of around 36,500 or 36,000 even is in the cards here, I do still look at the same ranges as relevant that we've been speaking about for the past couple weeks here. And with that said, a resolution, a 4-hour closure, specifically above 38,800, and I would look at this as beginning a lot more continuation to the upside, and I would call this range resolve to the upside. We're likely going to see that next major volatility event to the upside. Just listening outside, I think there's a prayer going on. That's strong Dubai culture here. Anyways, so yes, what would those targets be? Very likely somewhere here at around the 1.618 for the first target, which is around about $41,000. However, I really actually don't think that things would stop there, given that very low volatility read on the daily, which is a rather powerful time frame, alongside a couple other major indicators that I'm looking at as well. And I would generally be looking, if I can get rid of this one right here, for a move somewhere around the 0.5 Fibonacci retracement, which is around $45,000, maybe later in February or early in March. With that in mind, if Bitcoin does resolve itself to the downside, what would be the tangible price action for that? That would be a full hour closure below these Wix lows here on Bybit, below about 36,300. And yes, I would be looking for a full-on move back down around the lows. Not to new lows just yet. Again, I want to call back to this data over here. Don't think that Bitcoin has the open interest. It doesn't have the rocket fuel for a liquidation, a major liquidation event to the $29,000 to $30,000 region, which would be shown in this blue box right here, relevant for the macro. In this case, I do think, and to follow up on the last few weeks here, whilst Bitcoin provides a little bit of short-term downside as it plays off that good old news, I do still think that there's a few good indications why the upside is still very much relevant. So let's pop into them right now. It's going to be on this chart. Okay, that's showing nothing, but it comes over here on the daily. So this is the daily stochastic momentum oscillator. It's actually a version of the indicator itself that one of my friends made, and it's got both a stochastic and a DMI and volatility on it, and an ADX as well, and it also has a reverse function for it. And the daily stochastic momentum will be remaining to the upside as long as Bitcoin is closing above $36,000, which is very important here because that would imply, as I make sure that we are good there. Okay, we are good there. Beautiful. That would imply, as I recall my thoughts here, that if Bitcoin does come back down below even the short-term time frame range lows, 36,300 or so, I would be looking for that next move down well below to about $35,000, maybe even $34,000. Until then, this short-term range right here is irrelevant to you or not. I can't obviously make that decision for you, but if I can't make that decision for you, so I'll just leave off that topic. What I do want to call out, however, is this on the 5-day. So there's a very interesting signal here on the 5-day. It's only happened 4 prior times to this one in the past, and I'll just show them to you. Basically, it is this. The 5-day stochastic momentum has come down to about the 8.5 read right here, represented by this green horizontal line. I've marked off the prior 4 iterations for this in Bitcoin's 12 or 13-year history. It's really only happened a few times. And 3 of the 4 have actually been macro cycle lows. What's sombering about that is that those macro cycle lows, all of them have been pretty much retested and at minimum taken 3 months to really move off those lows with major upside momentum. But they were essentially representative of the macro cycle low. I'll show you this one over here. This one coming in from October 2011. Again, that was the low. Comes back down and retests it. A couple months later, it takes for it to really get going. I mean, even this portion right here, like this must have been boring as all hell, but hey, it was a low. And did go up a significant amount from basically that low price of $2.30 to a ripe old price on that run, realistically at about $1,200, which is rather impressive. Then the next one over here from January 2015, again macro cycle low. It was retested about 8 months later in August, but after that, upwards and onwards was the way. And then the other iteration was back here in December 2018 at the 3100 macro cycle low yet again. And took about 3 months for it to get going, but that was the low. The one time where it did not work out as a macro cycle low was a bull trap right here in the 2014 saga. Still got, on a wick-to-wick basis, 72% move to the upside. On a closing basis, about a 20% move to the upside, so very much relevant. And over here, we are once again printing the signal, and that will continue as long as Bitcoin's above about 34,500. So I would be using specifically 34,500 to validate a major downside move to probably somewhere around that macro cycle support right now at about $29,000 to $30,000 or so. And then I want to come back to it after that. I wouldn't want to make any further calls from this exact moment right here. Let me just double check on the video. Okay, we are good. Let's quickly get into Ethereum as well. I think that this one's rather simple. And we actually hit our target from, I forget the last time we spoke about this. It was maybe a week or two ago. We were essentially looking, hey, did I delete my... There it is. Okay, we were essentially looking for a bounce off the lows when we were trading around about 2,300 to the 0.5 Fibonacci right here, which is at around 2,900. In the early morning hours of today, this one got up to about 2,870. It's close enough, I would argue yes. And what's most important about this is that now we have a short-term time frame range going on, similar to Bitcoin. And I would feel comfortable and confident calling a range resolution with a lot higher upside targets in this case, with any sort of a 4-hour closure, basically above 28, let's call it 2880 in this case. Actually, I have it a little bit too shallow right here to be fair. 2880. Anywhere above there on a 4-hour closure, I would actually be looking for Ethereum to take a major leg up, very likely into the $3,000 region, so somewhere around 3,200, perhaps even as high as 3,400, based off that same sort of criteria coming back from here. I think the 618 is around 3,300 actually. Yes, indeed it is. So that is the proverbial bull trap-ish zone if it does indeed get there. But you know, after a 50% move down from the all-time highs, you know, I do think that things are more likely to bounce here than not. As I just close my trade. Okay, beautiful. Nice. Hey, not bad. All right, I'll take it. Nice. All right, just congratulate myself on my own trade. So that's really good. that's professional trading right there. Anyways, what would validate a downside move? Again, not to new lows, but around the current lows at about 2350 or so. That would be very specifically with a 4-hour closure below 2580. Again, 2580 or 2580 essentially would do it for me. And then yes, I would be looking for the next, I guess this is going to be about a 10% move, almost 10% move, about 8.5% move back down to the lows. Similar to Bitcoin, I would not feel comfortable calling a major meltdown to new lows just yet. If that were to happen, I'd be looking for a bounce first, and only if you do get a daily closure below about 2350 would I say that this one is likely to have a major continuation event to drastically new lows. In this case, probably well below $2,000 at that point. But again, similar to Bitcoin and kind of sticking with what I've been saying for the past couple weeks here, once Bitcoin got in this range, I do think it's more likely to play out a bounce here than not, alongside the rest of the market. So with that in mind, I think this is a good place to stop this video. I want to take a second to wish you well, and with that said, take care, and I'll see you in the next one.